Every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick. It's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
The great sci-fi art of the mid-20th century teased a vision of the future with one distinct element in common: a life for humans in outer space. Whether vacationing on an exotic new planet or commuting to the moon for business, space travel seemed like it was just around the corner. Yet here we are, a half-century later, and only about 500 human beings have ever left the bounds of Earth's atmosphere. But thanks to a set of ambitious private companies betting on the promise of space tourism, that long-awaited future could be here sooner than we think. For most of the history of spaceflight, governments have been the prime force behind nearly every aspect, from planning to funding to crew selection. But as early as the 1980s, proposals for commercial space tourism began to emerge, along with innovative solutions for getting people there, such as the wild concept of sticking a 74-person passenger cabin in the cargo bay of a NASA space shuttle. Although various non-astronauts have been selected for missions over the years, true space tourism didn't happen until 2001, when an entrepreneur named Dennis Tito coughed up an estimated $20 million to hitch a ride with the Russian Federal Space Agency for a week-long vacation aboard the International Space Station. 20 years later, we're seeing a new contender in this final frontier of tourism: private companies.
It's becoming a private enterprise situation, still very high risk with a high reward, potential reward. But, government is really out of the business of flying people now, and it's really going to be companies like Elon Musk and Jeff Bezos and Richard Branson that do that heavy lifting. Commercial space tourism is usually about taking the non-astronaut, the private citizen, into an orbital or suborbital flight. So you get a short amount of microgravity experience, and you can float and take some photos. And then you come back. This was something that technology had gotten to a point where the private sector was going to make a business out of this. There are multiple companies that want to get to the place where they fly people into space.
The first of these is Blue Origin, founded in 2000 by Jeff Bezos. Using the autonomous rocket system New Shepard, a tribute to the first American in space, Blue Origin plans to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile-high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken a flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team, and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's SpaceX, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers or about 62 miles, you only need to get up to maybe 5,000 miles an hour to get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect, and this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space because this is showing them that, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China, well, that's really significant. And you've got to be very thoughtful about it. The whole game plan right now is to make space really affordable and accessible for everybody, so that you can have fishing buddies going to space someday. But the first is special, and so with that, we wanted to have a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel. Axiom isn't the only company out to make your space stay a little more comfortable. Bigelow Aerospace has been building what they call expandable habitat technology, like their B330, an inflatable pod module that expands once in orbit.
There's even one attached to the International Space Station right now they've been testing. And you take it up, and it's rather small, and then you inflate it, and it seems to be working very, very well. This is likely to be the first kind of tourist hotel that you're going to see up in space. First of all, it's easier to carry instead of this giant tin can with all of that. The inflatables are lighter. You can just blow them up, and they get a nice big size for about less than half the weight, probably.
But even as space missions become accessible to civilians,
the risks of going into space are incredibly high. And you could die 1,000 ways that we can think of and 1,000 other ways that we can't think of.
This is Michelle Hanlon. She's a space lawyer at the Mississippi School of Law, focused on protecting humans in outer space.
Now, I'm not an attorney for any of the space tourists, so I haven't been privy to their private contracts. But I can tell you that the FAA requires certain waivers to be in those contracts. So, for example, the FAA says, well, we're not going to make you make your spacecraft to a certain safety level. We are going to make you, spacecraft operator, make sure that you inform your space tourists of all of the hazards that you know of. I imagine a very long waiver, all the ways you can die in space. And you have to understand that there's health risks, and you have to indemnify the US government if you are launching from the United States. So those are things that we know a space tourist has to sign and has to waive. So now let's go back and think about our space flight participants. The FAA calls space tourists space flight participants. They don't call them astronauts. Why is that important? If you're not an astronaut, there's no obligation to rescue you if something goes wrong. It's a lot of money to set up a rescue launch. If it can even be done, it's something really important to think about, and that difference as we cross this threshold from having astronauts in space to having real people like me in space.
And when we are able to make it to space reliably enough, there's still a host of other legal and ethical issues to consider before space tourism can truly take off.
There are so many gaps in space law that we are going to have to put in a lot of sort of basement ideas. And so, for example, the Outer Space Treaty is a treaty that offers principles and guidelines for state activities, for the activities of national governments. It doesn't talk about private entities. It doesn't talk about humans in space. So now if something goes wrong, so let's think about all the times hotels on Earth are sued, right? So slip and falls. You step on something in the bathroom, you sue the hotel, and it becomes a private lawsuit. because of the vagaries of international law, if something happens in space, well, boy, you can sue the state that launched your spacecraft, you can sue the company that brought you there, you can sue the hotel, you can sue the individual, you can sue every government related to that, because the way the Outer Space Treaty and the Outer Space Regime have set this up is that anything that happens in space first has to go through a diplomatic channel before you think about suing in a court of law. And so every single slip and fall in a space hotel is a diplomatic nightmare. And so we really need to figure that out before we start sending a lot of people there. You think about human rights in space. Here, we don't think about a human right to oxygen because it's kind of all around us and free. It's not in a space hotel. So what happens if something happens and the oxygen depletes? Who gets the oxygen first? And then, of course, let's not even think about the labor. How do you treat your labor in a space hotel where that person may be there for 2 or 3 years without coming back to Earth? So a lot of things to think about.
Space habitats are more likely in the near future to focus on research missions and be a home for experiments that can't happen as easily back on Earth.
Space hotels, I think they garner a lot of headlines and a lot of news, but at the same time, that's not the first thing that you're going to see happen. They don't offer the compelling business case, I think, that you'll see from a place that wants to manufacture pharmaceuticals or a new type of crystal or some type of filament or fiber optic cables and other things that you can do in microgravity. The things that are actually, a high value finished good, when you get that back to Earth and you sell it for a very, very huge profit margin, that's what's likely to happen in space, as opposed to having a real estate platform that you sell to a tourist. A space hotel is really interesting, and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be, millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space. When it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that, Virgin had talked about flying years and years ago. And it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable. And, investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had like less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide, and mine is a man named Jan, and his crew, Aaron,
Let's tidy up first.
and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Srostra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah.
You know.
That's the good thing about California, man.
Oh, man. We have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
And you drive us around day to day in LA,
Yep.
and then just roll out when you want.
It's my daily driver. Handles great, and then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yeah.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over. That's cool. Let me just pop that up.
Sorted.
So, home on wheels.
Yeah.
This is my vacation house.
Dude, it's so nice, man. Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything?
When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. They've proliferated. The knowledge is accessible on the internet, right? I used to fight the geotags, and I would get really pissed off. Like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
As a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and don't go in the valley. Yeah, no problem. We just wanted to get through.
It was a beautiful choice.
Glad we got out of the smoke.
Whoa, okay. But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky, look at it, strip malls of the Central Valley. We have made it sort of out of the smoke all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. So we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles. And the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts. Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots. On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command. So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines. And have you just sold them in the Central Valley or like throughout the U.S. or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019.
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay,
so.
and how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap.
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello.
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is Ellie Q.
Can I take her out for a spin?
Please.
Ellie Q, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her. Or that they miss
Literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
Ellie Q isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
Ellie Q, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of Ellie Q, from the way Ellie Q moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating. But at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
Ellie Q, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. Ellie Q?
Yes?
Schedule a doctor's appointment.
No problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more because she understood the fact that you need to run after your dreams and work really hard no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like, I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game. And then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks, so I play a straight 18 hours and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. am using the Roman numeral for
Connection
1,000.
lost.
And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
if you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point, because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live from the Bloomberg Interactive Broker Studio, streaming on YouTube and Bloomberg Quick Take. Yes, it is Monday, March 6, 2023. Tim, you know, is on leave. Katie Greifeld, Bloomberg News senior markets reporter in the house, well known to our TV, radio audiences. We've got quite a lineup.
I know. We've heard from a ton of big voices today. You can expect more of that over the next 3 hours. This goes until 6 p.m. now, right?
It does. So get your snacks, everybody. It's Jamie Dimon's world, and we are all living in it. We're going to hear a little bit more from our exclusive interview with the CEO of JP Morgan Chase. We're also going to hear from the CEO of Baker Hughes. Energy market, so important, as we know, especially with that ongoing war in Ukraine.
We do have Alex Steele down in Texas doing a great job. I was looking over the rundown, what's expected from her. She's a busy lady down there at CERAWeek, right?
Yeah, and she really knows this industry, so really getting to the details, especially as we are shifting towards a greener world. What does it mean for these integrated oil companies? We've got a Feta-palooza and a China-palooza because...
My favorite.
That's our week.
I know. Jerome Powell, so that kicks off tomorrow, his testimony in front of Congress. What he's going to talk about, I mean, I imagine he's going to stick to the script, but we do get to hear lawmakers ask him questions. Always
say,
fun.
Oh, I'm done. No, he's not.
He's going to stick to, you know, we need to raise rates, inflation's still a problem, etc.
Speaking of inflation, actually going in the other direction, Tesla cutting its prices on some of its cars again, so we're going to get into that. We're also going to talk about global luxury real estate, $2 million and up. So are you in the...
I'm looking at 3 apartments after work. They're under $2 million, though.
All right. Well, we're going to talk about that with the founder and head of Forbes Global Properties. We're also going to talk about a toxic workplace. We're going to do that with Catherine Minshew of The Muse. They've done a survey. We're going to get to that. In the meantime, we've got stocks well off their highs of the session. Some economic news also coming out. We're going to get to it all. We're going to head over to our TV colleagues, our cross-platform coverage of the markets. Countdown to the close. It starts right now.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session on this Monday afternoon. Romaine Bostic alongside Scarlett Fu. We're joined right now by our colleagues Carol Masser and Katie Greifeld. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, Bloomberg Originals, and yes, Carol Masser.
Yes.
For those folks streaming on YouTube. Happy Monday. I hope you had a wonderful weekend.
I did, kind of mellow. How about you? You had a good one, right?
Yeah, it wasn't bad. I spent all weekend just watching the National People's Congress to see whether they would have anything interesting to say. They kind of let me down, Carol.
They did. They kind of let the whole world down when it came to their growth projections, and that's why I'm kind of honing in on all things China, as we say. And we're going to pull up a couple things for the TV team and the visual team because what's going on, if you look at China stocks overall, they're definitely down about 1.5%. The China National People's Congress coming out, growth target of about 5%. It's been characterized as modest, so a little bit of a bummer, if you will. They didn't announce any major new stimulus, so that also was disappointing. And so I wanted to take a look at the Nasdaq Golden Dragon China, as I said, down 1.5%. If you look at the Crane Share CSI China Internet ETF, it is also showing some selling, down about 2%. It's been on a tear since late October. And then what's really been hit, because there is kind of that modest growth rate for China and no stimulus, take a look at the miners, right? China taps into all things in the mining world, in particular copper and iron ore. So we saw BHP Group down almost 3%, Katie, and then Rio Tinto down about 3.5%. So that's a bit of a bummer in today's session.
Well, I am keeping an eye on the bond market. We did see a bid going into bonds earlier in the day, but now you look at the 10-year yield, you can see it's higher once again, flirting, if you will, with 4%. There was that brief, beautiful moment last week where the entire curve was above 4%. Not the case right now, but a lot can change once Jerome Powell starts speaking.
All right, we go back to the broader market, the broader equity market here with the Dow and the S&P just barely clinging to gains here on the day, up roughly about 0.1% here. Similar story for the NASDAQ. The big underperformer today, and one that I think is interesting here, is the big underperformance that we're seeing in the Russell 2000, Dow Transports, as well as the S&P mid-caps. Russell 2000, Scarlett, down 1.6%.
Yeah, that's been a laggard all day long here. Also lagging in today's trade are some of the cyclicals. Materials has been underwater for most of the day, off by 1.6%. Also, consumer discretionary turned from positive to negative, now off by 0.5%. On the flip side, some of the big tech names continue to support the S&P 500, whether it's the hardware companies or the metas of the, I almost called it Facebook, but metas and the like.
It's okay. It's okay. You can do that.
I know. Old habits die hard.
Well, speaking of those names here, I mean, Google shares, Alphabet shares, if you will, are doing the same thing you're doing, Scarlett. Alphabet shares up 1.7% here on the day. And look at Snap, up about 12%. Now, some of this appears to be tied to some of the rumblings coming out of Congress about a further additional ban on TikTok here. A lot of folks looking to see, well, who could potentially benefit from a full-on ban. And, of course, a lot of people gravitating to Snap. Interesting commentary out of some of the sell-side analysts saying that YouTube, of course, owned by Alphabet, could be a big beneficiary there. Keep an eye on JetBlue and Spirit Airlines, learning that the government is moving forward based on people familiar with the situation to potentially block that deal. Investors actually seem to like that. Investors weren't really all that plus with that deal to begin with. JetBlue up about 2% on the day. And Norfolk Southern shares down about 2% here. Their CEO expected to appear on Capitol Hill a little bit later this week. A second derailment out in Ohio. This one not quite as devastating as the East Palestine one is, but something to keep an eye on. I do want to go back to the big cap tech stocks, and well, the biggest of the big cap tech stocks, Apple. Interesting resumption of analyst coverage over at Goldman Sachs. Remember, they dropped coverage last year, and that was primarily because their analysts had moved on. They have a new analyst here, and he's initiating with a buy rating. And I thought it was interesting because this is actually the first buy rating that a Goldman analyst has had on Apple going back to 2017. Wow. They've actually been pretty, not a very hot on this stock. And remember, before they had dropped coverage back in 2022, they had actually had a sell rating on the company here. But now the analysts over there, Carol, really looking to that stickiness of that Apple ecosystem and the services revenue and saying that could be the big tailwind for this company in the midst of a lot of headwinds out there, at least on the macro level.
All right, so interesting to see that call on Apple by Goldman. Also interesting to see and hear what Jamie Dimon had to tell our Ed Hammond today. Of course, the head of JP Morgan Chase, he is the last big bank CEO off of the financial crisis that is still there. He's also a voice that we know everybody wants to hear from. As we said, Ed speaking to him exclusively at the JP Morgan Global High Yield and Leveraged Finance Conference. It was in Miami. Yes, they talked about inflation and some other things, but here's what was top of mind when it comes to some of the current concerns and worries for Jamie Dimon. Check it out.
The thing I worry the most about, if you go, is Ukraine. It's oil, gas, so the leadership of the world, and our relationship with China. I mean, that is much more serious than the economic vibrations we all have to deal with on a day-to-day basis.
All right, of course, the chairman and CEO of J.P. Morgan Chase, Jamie Dimon, talking exclusively with our Ed Hammond. I do think, though, that is what, when you talk to many market strategists at this point, Katie, what they are most concerned about is geopolitical. And I think a year ago, what were we seeing? First, that Russian invasion into Ukraine specifically, and we continue to worry about China.
And you think about the impact that had on the energy market. It was really shocking. And throughout most of the summer, it felt like the whole market was just a trade on oil. When you think about the inflationary impacts from that, certainly if you ask the Fed, I would think geopolitics ranks pretty high on their list as well.
Certainly, and that's even more the case for a place like Europe, which felt uninvestable at some points last year because of what the energy shortage would mean for the region. And then you have one warmer than expected winter, and suddenly all the money is going right back into Europe.
Yeah, and you wonder, though, I mean, how that really changes the dynamic for policymakers, both on the fiscal side as well as, of course, on monetary policy. I know there's been a lot been made of Jay Powell and his trip to the Hill here, always sort of a wild card to know exactly what kind of questions are going to get thrown at him. I'm sure he'll get something that's completely
probably really great questions, I would imagine.
You think so?
He's going to be asked if he watched Chris Rock, I think,
really
over the weekend.
insightful. They want to know where terminal is, what the neutral rate is. Does it have to be structurally higher? I'm sure it'll be along those lines.
They'll ask about the dot plot for sure. They're probably going to ask about the 2% inflation target, whether it lives on.
Absolutely.
Right? I mean, that's top of mind.
Those are big
for them.
questions.
That's top of mind. I think those will be the first three questions, and then they're going to move on after that. But it does get to the broader issue here of whether the market should really even be on pins and needles for anything. I mean, he's pretty relatively well-versed in this and not really the kind of guy to make too many flubs.
It's kind of tricky once again, right? He doesn't make a lot of flubs, right? He's got this down pat, you could say. But what's interesting is how far he's willing to go to kind of push the labor market ultimately down, and that becomes problematic. It's always that balance, right? And we know that they've been on this inflation hunt to bring down that level, but at what cost to workers and employment, which has so far stayed up strong. So I do feel like it's going to be interesting, that balance. All right, guys, that's a wrap. We'll be back, though, in less than an hour's time. Our cross-platform coverage, radio, TV, YouTube, and, of course, Bloomberg Originals. We're going to count you down to the close on this Monday. And on Bloomberg Originals, because as we said, right, one of the key focal points for the markets, for investors this week, Katie, is Jay Powell heading to Capitol Hill, 2 days of testimony. He'll have his statement, and then he's going to get a slew of questions, right, from members up on Capitol Hill, and we'll see what he has to say. With us, with some more thoughts on this, is Jonelle Marte. She is Bloomberg News economics and Federal Reserve reporter, joining us via Zoom from New York City. Jonelle, good to have you here with Katie and myself. So we just talked about this with our TV colleagues. We've all been over it. How is it that you guys are thinking about, and how you are thinking about it specifically, about what Jay Powell will be doing over the next couple of days?
So, hi there. It's going to be a really important couple of days here that we will hear from Powell, because it's probably going to be his last public remarks before the meeting, right? So I think what we're going to be watching, or what's expected of Powell, is for him to echo what we've been seeing from and hearing from some of his colleagues on the Fed. So the message has really been, first of all, that they're not done raising interest rates, more rate increases to come. And I think some people have also been pointing out that they think interest rates, or that they're prepared to take interest rates higher if we continue to see economic data come in really hot, right? So we have seen really blockbuster jobs reports and inflation data showing that it's still very elevated. And thankfully, the Fed will have a few key reports coming in before they make that decision. And that's going to be very key to what they end up doing, and also to what they signal in terms of how high they think rates will have to go.
So if we expect to hear from, classic Jerome Powell tomorrow, very measured, very thoughtful, I am curious though what the bigger risk is here. What is the more likely risk, at least, from the market's perspective? Is there a bigger risk that Jerome Powell accidentally sounds dovish or accidentally sounds hawkish once we actually start getting some questions?
So I think the tone from what we've been getting from Fed officials has been more hawkish than dovish, especially in the past month, where, maybe we thought 6 weeks ago that the economy was starting to slow, that inflation was coming down. And actually, the last couple of sets of data reports have shown us that the economy remains really strong. There's still a lot of demand for workers, and inflation is not slowing down at the pace that people expected. So I think the tone has been hawkish. I think we're likely to see more hawkishness from Powell. But again, the message probably being that they're going to look at the data, again, these key reports coming in before they make their decision. And what they don't want is for markets to start to believe that inflation is going to always stay this way, for inflation expectations to become unanchored. So that's really the message that they've been trying to deliver, is that we're going to do what it needs to have. We're going to do whatever it needs to be done to get inflation back down to our 2% target.
All right, so it sounds like, to be fair, it's a little bit more of the same, right? Yeah, we're sticking to that 2% target. We're going to continue to be data dependent. We're going to keep raising rates until we get it right. So I feel like it's going to be more of the same. Is there anything new that we could get in terms of tone or message, Janelle, from Jay Powell?
Well, we do want to hear to see how he will be interpreting the data that comes in. And when they meet again in March, you have to remember they'll be updating their projections for how high they think rates will have to go. So we will be listening for any indication that the dot plot, as it's called, is going to show higher terminal rates. So I think we're going to be listening for those kinds of clues. And the Fed has, at this meeting, that very important tool. So even if they do decide to stick with 25 basis points, which is what the market is expecting and what many officials have been saying that they prefer, if they suggest that they're prepared to take rates higher by showing that in the dot plot, then they can still send a very hawkish message to us.
Wouldn't it be like if they said they could go now back to 50? That would be
that would be huge,
right? That would be a different message. Like this whole idea of maybe going higher longer. Like I get it. Like I feel like it's a sliding scale, right? Do you feel like it's a little bit of a sliding scale potentially?
Yeah.
But if they jumped all of a sudden and said, "Well, we might need to do 50 at a meeting," like that to me would be a bit of a shock.
I think so.
Well,
I mean, if you think about what's priced in,
it would certainly be a shock. I would say it's not what the market is expecting, though the market has it priced in a small chance of that happening. And some officials, of course, have said, the hawkish officials have said that they wanted to be on the table. But again, I think it's been clear from what we've heard that this measured approach, this 25 basis point increment at this level with where rates are at this point, is what most of the Fed officials would prefer. However, I don't think it's been taken off the table completely. And so, again, we'll be watching to see what we get from the economic data, not only before this meeting, but in the coming meetings.
So we're talking a lot about interest rates, which makes sense. That is, their primary lever. Talk to us, though, about quantitative tightening, because in the background of all of this, you do have the Fed's balance sheet shrinking. What is the thinking there? Should we expect Powell to get some questions on that? Does quantitative tightening last through the end of 2023? What's the current thinking around the balance sheet?
That's a really good point. So the Fed has been reducing its balance sheet in the background, as they like to say, by up to $90 billion a month. And it seems to be going fairly well. However, the reserves held at that big banks hold at the Fed, those reserves have been draining. And there's been a lot of liquidity held in the reverse repo facility, which is a program that lets financial firms park some money with the Fed overnight. So there's a little bit of concern among some people in the market that if this money kind of stays in the reverse repo program, but and reserves continue to drain, that the Fed might then have to change course if we see reserves fall too low. But what we've heard from the Fed officials so far is that they're aware of what's going on in the markets, they're watching it, and that they're prepared to make changes if necessary. But that for so far, the program seems to be running smoothly. They're continuing with the balance sheet runoff, and they hope it will stay according to plan. Of course, we could hear from some politicians, not policymakers, politicians on Capitol Hill, questioning Powell about that. And some people obviously are not huge fans of the Fed's big balance sheet because they say that it's been influencing maybe even the housing market in an unfair way. Or they don't like the Fed having, so much, snapping up so many assets. So, I mean, it's certainly something that he'll get questions about. But for now, the message has seemed to be that it's working.
Janelle, does the strength or continued strength, I should say, in the labor market, plus the bounce back that we've seen in the equity market, certainly again this month, kind of give Jay Powell some breathing room to be more hawkish, as you guys were talking about earlier?
It might. So clearly, there is some concern that the higher interest rates could hurt the labor market, could cause people to lose their jobs. And that might be something that it is something we've heard about from Democrats, for example, who are reminding Powell, for example, that, hey, you also have a maximum employment mandate. So while you're worried about inflation, let's make sure that we don't cause undue pain to the economy. But if he gets those kind of remarks, he'll be coming in at a moment where the unemployment rate is at 3.4%. And again, like we said, we're seeing some of a rebound in equity markets. So I think that works to his favor in that sense. But I think that he and some others have said that they're watching wages, they're watching labor markets, and they are expecting probably some weakness in the labor market to take place before they can get their inflation target down to 2%.
All right, going to leave it on that note. Jonelle Marte, Bloomberg News economics and Federal Reserve reporter, joining us via Zoom from New York City ahead of Jay Powell getting ready to march up to Capitol Hill for 2 days of testimony. What's kind of front and center for you?
I'm interested, of course, to hear his comments on inflation. As we were just talking about, he's probably going to stick to the script. But if you look at some of the measures of inflation expectations, I like to look at break-evens in the bond market, those market-based measures. They've been moving higher. You think about this big sell-off that we've had across the Treasury curve. A lot of that is coming from the break-evens component. So the bond market is, once again, bracing for higher inflation. It's still very much top of mind. It seems like that immaculate disinflation narrative has sort of died off. So, I mean, anytime Jerome Powell speaks, even if it's expected to stick to script, he's expected to say the same thing. It's still a big event.
Absolutely. And this is going to be it then before the next Fed meeting in terms of what we hear from him. You also had LIBOR cracking 5% for the first time. So a big global rate. And I just think about the ECB's governing council member, Robert Holtzman, saying he backs half-point interest rate hikes at every meeting through July. So it's a global story, and I think about the global impact of central banks continuing to raise rates. Carol Massar, Katie Greifeld, we are Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 321 on Wall Street. NASDAQ now negative on the day, giving up a gain of 139 points. Right now, NASDAQ is down 8 points, drop there of 0.1%. Earlier gains are fading. We have got the S&P holding on to a 2-point advance now, up less than 0.1%. The Dow higher by 10, also up by less than 0.1%. Stocks are struggling to hold on to gains on speculation that the recent rebound might be getting overdone as economic risks loom. The 10-year yield, 3.97%, with the 2-year right now at 4.89%. Gold down $10 the ounce to $18.46, down 0.5%. And West Texas Intermediate crude up 1%, $80.47 a barrel on WTI. Sources tell Bloomberg the Justice Department and Department of Transportation are expected to take action as soon as tomorrow to block JetBlue's $3.8 billion merger with Spirit Airlines. Shares of JetBlue, they are up now by 1.7%. Shares of Spirit are down 8.9%. Recapping, stocks are now mixed, with the S&P up 3, little changed, up less than 0.1%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. A lot of news, as you know, we've been talking about it already, coming out of China overnight. Most notably, China's annual National People's Congress, the first since Beijing brought an abrupt end to 3 years of crippling COVID-0 restrictions, has begun with a modest target for economic growth and few hints of past stimulus extravagance. There's other headlines, but let's get right to our guest. It's great to have with us to really weed through all of the headlines. Andy Brown, former editorial director of Bloomberg New Economy. He spent 3 decades in Asia as both China editor and columnist for the Wall Street Journal. He leads the China Hub. He is a partner at Brunswick Group, and he joins us via Zoom in New York City. Andy, good to have you here with Katie Greifeld and myself. How are you?
I'm doing well. Just got back from a trip to Beijing and Shanghai. It's great to be with you, Carol and Katie.
Well, great to have you here. So tell us, because there's a bunch of headlines overnight, you know, putting out a growth forecast. What's front and center? And tell us about your trip and kind of what was the mood and kind of general conversation.
Yeah, upbeat. You know, consumption is up. Beijing is chock full of cars, impossible to move around the city. The shops are full. The restaurants are doing a roaring business. Shanghai similarly, but the airport pretty much deserted. The external part of the economy has not picked up. Problems with flights, problems with visas, very few foreigners in Beijing. That's not expected to pick up until sometime around the summer.
That's interesting. Yeah, the fact that, you know, there's a lot of movement within the country, but in terms of people coming in and out, maybe not so much. Let's get to some of the numbers that came out overnight, because I feel like that really set the tone for trading, both in Europe and at the start of the U.S. session. So we look at the economic growth target of around 5% for the year. I know that was a bit disappointing in terms of, you know, what people were expecting. How surprised were you to see a 5% handle?
You know, I wasn't surprised in the slightest. I think it reflects two things. First of all, they wanted to set an undemanding target that they feel confident they can actually meet. That's important for credibility, because they missed their growth target last year by a mile because of zero COVID. That's the first thing. Then I think more to the point, it reflects the reality that China faces an awesome set of challenges. Really tough problems. I mean, the property market is still in the doldrums. That's 25% of the economy. Local governments are bankrupt because they've spent all of their budget on COVID testing and COVID quarantines and so on. Exports are drying up because of an economic slowdown in the U.S., Europe, other advanced economies. And of course, the U.S. is killing China's high-tech economy with these bans on semiconductors and sanctions against literally hundreds of some of China's leading tech companies.
So, Andy, you know, this is a government, as you well know, that they do kick in the stimulus when needed. As you said, they've spent a lot of money already. Will they not, if things start to come in, get into trouble, will they not jumpstart it again with more stimulus?
You know, that game is over. It's so played out. They're getting less and less bang for their buck when it comes to infrastructure. China simply doesn't need more infrastructure or that much more infrastructure, at least at this stage of its development. The housing market, as they say. So that was the normal playbook, right? I mean, you know, you kind of fire up the furnaces, get the steel mills rolling again, build bridges and opera houses and highways and apartment blocks. That doesn't work. It's going to be the consumer that does the heavy lifting this time around, which for the global economy translates something like great for LVMH, great for Diageo, great for all the consumer luxury companies and their business, by the way, is going gangbusters in China right now and cascading down not just the first tier cities, second tier cities, but also now down to the third tier cities. Very strong consumer rebound. Not so good if you're a BHP or a Vale.
And that, I mean, the fact that they really want the consumer to drive this, you have to wonder what the inflationary effects are there, what the sort of ripple effects of that could look like. But talk to us a little bit about that focus on the consumer. I mean, how does Beijing actually, you know, make sure it's the consumer that's driving that growth?
You know, they have to turn around the drivers. Now it's all about the consumer. And to do that, they're going to have to retool their whole economy. They're going to have to basically put more money in people's pockets. And that is going to mean a redistribution of income away from local governments, away from the state sector, towards the household. Now, that could be indirect. It could mean, you know, pumping more money into education, into healthcare, into childcare, or it could mean outright grants. But one way or another, China has to shift the drivers of growth decisively.
You know, and some of the other headlines that came out, Andy, I'm sure you saw them. China looking to boost high-end manufacturing. That's one thing. And then also kind of leaning on and putting more pressure on their own private sector to play a bigger role in establishing technology independence. So they are leaning on a lot of different areas to kind of jumpstart their economy.
Yeah, the private sector, this is the interesting one, and really it's the contradiction that's right at the heart of Xi Jinping's plan to revive the economy. And to revive the economy, they have to revive the confidence of the private sector. These guys create just about all the new jobs in China, and they've been pummeled for the last 3 years, pummeled by the COVID lockdowns, by the assault on the private sector, on the big tech platforms, on whole industries like after-school education, on the real estate sector, some of the big developers in extreme distress. So that's simple. But at the same time, Xi Jinping wants the party in control of everything, top-down control. And that is going to be a big feature of the next 5 years of Xi Jinping's governance. Now, the private sector are looking at that and saying, okay, where do we fit in? Where do we fit in here? They don't believe that the punishment is over. They like the rhetoric, this rhetoric about, yeah, we believe in you guys, private sector, the markets are open, and so on. But they're not seeing any action right now. And they're very skeptical. Of course, we've seen a big boom in the reopening trade in the market. What I'm hearing from Chinese fund managers, Chinese entrepreneurs, from at least some of them, is this is an opportunity to sell. And some of them are telling me it's a last chance to sell.
Wow. Okay. Interesting. Because I was thinking about, all right, you know, we're hearing all these headlines, saw all these headlines over the weekend, but I think about, you know, the missing, you know, top investment banker in China. And I feel like from day to day, you can get news out of China that says, wait, China, you know, officials want more oversight of various industries. And I feel like sometimes it changes from day to day, and I don't know quite what to trust at this point. Bottom line, Andy, I mean, the Chinese government, as you said, more oversight, no doubt about it.
More oversight, more of Xi. Of course, we haven't talked about the big government reorganization that is going to be underway. This is where Xi Jinping gets his third term as president, a ceremonial title, really. He already has real power through his position as head of the party. And of course, he got pretty much unlimited tenure in that job at the end of last year. And now he's going to put all of his loyalists in the key positions within the state apparatus. That means the premier, the executive vice premier in charge of the economy, head of the central bank, finance ministry, judiciary, and so on and so forth. But they're all going to be working very much under this top-down, party-led system. Xi Jinping, the overall direction of travel is very clear. He wants to harden the economy. He wants to build up the country's technological base because he believes there's going to be a long-term, arduous struggle against the United States. And he wants the party to be in charge of that. And frankly, the private sector are going to have to get with the program.
And I just want to make sure I heard it right. Did you say people were saying like this is the last time to get out of the market, the Chinese market? Just quickly.
Yeah, people are not convinced that this is sustainable. And what they've all been predicting is, sure, there's going to be a relief rebound when they finally lift COVID, which they've done, lifted COVID zero. But some of the people that I'm talking to are saying, we don't have long-term confidence. A market rebound now is a chance to sell.
All right. Well, we certainly have seen that play out in the Chinese trade here of those ADRs in the U.S. coming off some of their highs. Andy, thank you as always. Andy Brown, partner at Brunswick Group, joining us via Zoom from New York City, understands the Chinese market. As we said, spent some 30 years in Asia as both China editor and columnist for the Wall Street Journal, and former Bloomberg colleague as former editorial director at Bloomberg New Economy. China, I feel like it's a big question mark.
It's all about the consumer in China, though.
Yeah, he's definitely laid it out, President Xi. All right, now let's get a check on the latest world and national news. We are headed off to Washington, D.C. Nancy Lyons in our 99.1 newsroom. Hey, Nance.
Thanks, Carol. Well, President Biden in his new budget is expected to ask for funding to implement an executive order that would restrict U.S. investment in parts of the Chinese economy. We get more from Bloomberg Government's Emily Wilkins in Washington.
It's always interesting with the president's budget because it kind of gives you a general sense of where the White House is going, what they're thinking, and how they feel about the economy. But it's always good to put the disclaimer in there that the president's budget is always dead on arrival, and Congress kind of takes a look at it, nods their head, says, okay, and then winds up doing their own thing.
Bloomberg Government's Emily Wilkins in Washington. The president plans to unveil his budget this Thursday in Philadelphia. Well, the U.S. economy continues to do reasonably well in the view of Jamie Dimon, the chief executive of J.P. Morgan Chase. We get more on that from Bloomberg's Irv Chapman.
Dimon said consumers are in a much stronger position than they were when recession hit in 2008.
The consumer still has a lot more money in their checking accounts than before COVID. Jobs are plentiful, wages are going up the lower end, which I think is a good thing. They're spending 10% more than last year, 40% more than pre-COVID, and it looks like they'll have excess money to spend roughly until the end of the year.
Dimon said the principal economic worries stem from impacts of the continued war in Ukraine, including how China will behave. In Washington, Irv Chapman, Bloomberg Radio.
California Governor Gavin Newsom says the state will stop doing business with Walgreens after the retailer said it will not sell abortion pills in its stores. In a tweet, the governor says the state will not be doing business with any company that, quote, cowers to the extremists and puts women's lives at risk. Earlier today, Walgreens said it would not sell the pill in 20 states. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. Stocks are trading mixed. We have got just about 19 minutes to go ahead of the closing bell. So let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks are mixed after erasing an earlier rally in what's been a choppy session. The Dow is up 30 points. S&P is little changed, with the Nasdaq down 15 points. The U.S. 10-year yield is at 3.99%, and small caps are down 35. 6 of the 11 main S&P sectors are lower, with materials and discretionary providing the biggest drag, while communications and tech are the best performers. Nasdaq biotechs fall 50 points, transports drop 125, semis are lower by 35 points, while the VIX is higher by 1%. Leaders in the Dow, Merck, Apple, and Coca-Cola, while Dow Inc., Walgreens, and Intel are the worst performers. Tesla fell after cutting prices for the Model S and X for the second time this year. In other news, Merck rose after data for 2 heart disease drugs. And in deal news, JetBlue's $3.8 billion Spirit Air merger is expected to face a DOJ antitrust lawsuit this week. Wrapping things up, Altria rose after a deal to buy Enjoy for about $2.75 billion. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
And we thank very much, Bailey, and to hear live breaking news over your Bloomberg Type Squawk, SQUA, on your Bloomberg terminal. This update brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Even if your small business only had minor setbacks during the pandemic, you could still qualify for a payroll tax refund. Provide the tax experts at Innovation Refunds with some basic information and let them calculate the amount you're eligible for. Learn more at getrefunds.com. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 17 and a half minutes left in today's trading session. Carol Master along Katie Greifeld live here on Bloomberg Business Week in our Interactive Broker studio on YouTube on Bloomberg Originals. And Katie, bouncing around way off our highs of the session. In fact, just off our lows when it comes to the equity trade, and certainly watching what's going on in treasuries. We're bouncing up higher as well. That 2-year, as Charlie mentioned, 488.
Mm-hmm. We are so close to 4%, really across the curve. You look at the S&P 500, though, like you mentioned, up just 0.1%. It's really hanging on to gains there as yeah, 17 minutes from the bell. Let's get some more on the action with Mark Barabeau. He is head of global equity over at Jennison Associates. He joins us now on Zoom from Massachusetts. Mark, it's great to have you with us at the start of what's expected to be a pretty big week. We have Jerome Powell tomorrow. We have the jobs report on Friday. What are you looking for? Is there anything that could happen this week that would change the needle for you?
I don't think so. I mean, we have a pretty steady state environment right now, right? I think the market agrees the Fed's going to gradually move rates from here, probably not that much. The economy's been really strong over the last 6 months. Job growth year to date's hundreds of thousands. So it's a pretty good environment fundamentally, although things are slowing at the margin in certain places. So I think we all just have to be patient.
And so I was saying a little bit earlier about the jobs report on Friday. I think this is the first jobs report where I've been more excited to see the revision than I am to see the actual number, because you remember what we got in January's report, 500,000 jobs out of, I don't know, felt like nowhere. What are you looking for in Friday's payrolls print? Are you like me? Are you not too excited about the headline?
Yeah, I'm not too excited about the headline. I think we've been in a very strong job market for quite some time now. Employers are looking for people everywhere, seemingly, but Silicon Valley. So it's a pretty good environment out there. I'm not too excited about it one way or the other.
All right. Okay, so that's an interesting perspective. Having said that, you manage the PGIM Jennison Global Opportunities Fund. It's beat nearly all of its peers over the past 5 years, returning annually on average almost 9%. You're also involved in the management of the International Opportunities Fund, also outperforming over the past 5 years. You also are involved in the Emerging Markets Equity Fund. So a global perspective, an international perspective. When you look at the markets right now, where do you want to commit new money? Is it outside the United States or inside the United States?
Oh, I think it's a collection of everything. We don't look at it regionally because I think that's very dangerous. Then you're relying on top-down macro things, and I don't think those really matter today. What really matters today is unique demand drivers for individual companies. That's what drives our investment decision making, and I think that's what's going to drive the markets this year. So that's our focus.
What are unique demand drivers, Mark?
Well, there's a few today that are pretty exciting. Let's start with number one, this huge transformational move in mobility. That's both the move to electric vehicles and autonomous driving. That's going to be the biggest transformation we see in the next 5 years worldwide for any big industry. And of course, the leader is here in the US, Tesla. So there you get leadership here, and so all of a sudden you're making a US investment. But it's because they're the driver of the big change.
So there's two interesting things there that you said. First of all, that this isn't about macro, but it feels like this has been such a macro-driven market over the past few months.
Oh yeah.
Tesla. Let's talk about Tesla because I don't know. It feels like if you compare it to other automakers, it's so expensive. It's so richly valued. And I mean, your point is taken on the fact that it's the leader, but how do you sort of reconcile the fundamentals with where the stock is actually trading?
Forward-looking, PE on Tesla of almost 49. You look at something like a GM, it's not quite 7.
It's a lot of daylight there.
Not apples to apples. We can put that out there. Anyway, go ahead, Mark.
Well, yeah, no, that's fine. If GM could grow their sales and earnings 70% in the next 2 years, it would have a high multiple too, but it can't. So, that's what the market's looking at. I'm just looking at consensus numbers, and it's 35 times next year's earnings, so not too bad, and 63% growth in top line. So over those 2 years, so that's pretty good, and it's very profitable, as you know. The key thing for Tesla is it has the capacity, the battery capacity, to meet demand today in the marketplace for electric vehicles, and the others are all playing catch up. And some of them have some very good products on the market, but they can't make enough of them to make a difference. So we think, for example, like the Model Y this year will challenge the Toyota Corolla for being the #1 selling vehicle in the world, never mind electric. It was number 4 last year. So that kind of demand inflection is very unique. We're at that big curve of adoption swing where you get consumers all of a sudden clamoring for these products. And of course, Tesla has slashed pricing, which is why the stock, one of the reasons it did so poorly in the fourth quarter. But as a result, demand is responding. So you kind of want to be positioned in companies that are going to deliver very strong top line regardless of what the Fed's doing. Nobody buying an EV cares what the Fed's doing.
All right, so you like Tesla. We're going to actually talk with our Dana Hall who covers Elon and all things Tesla. Just real quickly, got 20 seconds. NVIDIA, it's been on a tear. It's up more than 60%. It's the AI craze. You're buying into AI? Just quickly.
Oh yeah, we're buying into AI. This may go in November of last year when ChatGPT hit the market in such a big way. It may go down in history as the iPhone moment. So we think artificial intelligence, this generative AI from these large-scale language processors like OpenAI, are going to lead to huge innovations in software applications and consumer applications going forward. But it's accelerating now. It's not futuristic. It's like the metaverse, which, who cares?
Right.
This is actually...
Mark, we got to run. Mark Barabeau, he is head of global equity at Jennison Associates, joining us via Zoom from Massachusetts. Carol Master, Katie Greifeld, this is Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Just getting a headline right now on the Bloomberg Professional Service. Federal Trade Commission is expected to sue Intercontinental Exchange over its proposed $13.1 billion acquisition of mortgage software rival Black Knight as soon as Thursday. Now, this is, according to sources, shares of Intercontinental, they are up 0.7%. Black Knight down now by 0.9%. Also, sources tell Bloomberg the Justice Department and Department of Transportation are expected to take action as soon as tomorrow to block JetBlue's $3.8 billion merger with Spirit Airlines. The sources say the Justice Department is expected to file an antitrust lawsuit in federal court alleging that the elimination of Spirit would increase ticket prices and decrease options for travelers. JetBlue shares, they're up 1.2%. Spirit slumping now by just about 8.4%. Tesla reducing prices on some of its expensive models, as we hear from Steve Rappaport.
Charlie, the move comes days after Elon Musk said cuts earlier this year had piqued interest in the company's electric vehicles. The Model S and X now start at $89,990 and $99,990 in the U.S., down a respective 5.3% and 9.1% according to Tesla's website. The company lowered prices of the higher performance Plaid versions of each vehicle by 4.3% and 8.3%. Musk said last week that desire to own Teslas was indistinguishable from infinite and that demand will go crazy as the company makes its cars more affordable. Charlie?
Steve Rappaport, this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Howdy, howdy, everybody. Carol Master along with Katie Greifeld. We're live in our Bloomberg Interactive Brokers studio at Bloomberg headquarters on YouTube on Bloomberg Originals. And in just a moment, we're going to head over to our TV team and talk about the market close. In the meantime, if you had some trouble on Twitter, you're not alone.
Yeah, my whole timeline was filled with people tweeting about the apparent outages.
Was it really?
It really was. I tweeted about it too, just to add to the hysteria. So apparently some users were getting error messages when they tried to click on links within tweets. Twitter said that it was the result of a, quote, internal change that had some unintended consequences. Less than an hour later, the company tweeted that things should now be working as normal, so our national crisis is over.
A long national nightmare.
Yeah.
Known as Twitter. No. No, we all love Twitter, as you know. Katie, I mean, if you don't follow Katie, you should, because she always
tweet
makes
a
me
lot,
laugh.
unfortunately.
A lot of cats, just gonna say. In the meantime, as our well, I won't say who did it. Okay, a producer whose name we won't say, talking about this story about the American Dream Mall just across the water from where we are here in New York City. This story just kind of reminds what a nightmare this Dream Mall has been, because it has had so many iterations.
Oh, yeah.
It always seems to see some kind of rough story associated with it.
Well, it has another rough story. Now we have East Rutherford in New Jersey. It's suing the American Dream Mall and Entertainment Complex over its refusal to make about $7.5 million in property tax-like payments and $400,000 for sewer service. So the owner
Important
is triple.
stuff.
I know, right? Yeah, things you really care about at a mall. American Dream's owners, 555 Group. It had agreed to make the payments in lieu of real estate taxes to the borough of East Rutherford on the land surrounding the mall. But, you know, they're saying, according to a March 3rd complaint filed by the town in the Superior Court of New Jersey, that that isn't quite happening.
All right. There's a lot. There's
a lot to unpack.
Yeah. There's always a lot of to unpack when it comes to this mall. It goes back several years, different owners. But anyway, it's basically the deals you make, right? To do some development, and then it's like, hey.
Have you been?
No.
I'm dying to go. I would love to. I drive past it all the time. Because there's the indoor ski. You can. There's like some sort of roller coaster.
I think there's a water park for kids.
Something like that.
Right up our alley. All right, maybe there's a road trip.
Yeah.
All right, everybody, time to head over to our TV colleagues. Talk about the markets, count you down, because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now. We are 2 minutes away from the end of the trading day. Romaine Bostic and Scarlett Fu, we're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast. We're joined right now by Carol, the Yacht Master Masser, and Katie, the Horse Whisperer Greifeld. We welcome our audiences across Bloomberg Television, Bloomberg Radio, Bloomberg Originals, and yes, Carol Master, for those folks streaming on YouTube.
Yes, they are streaming on YouTube, and they're watching kind of a little bit of a, everybody keeps describing it as kind of a meh day, if you will, but no surprise, Katie. We've got Jay Powell up on Capitol Hill tomorrow, 2 days. What he has to say, how he manages his message again is really important.
Yeah, definitely a sort of wait and see day. Kind of endearing to see the S&P 500 just trying to cling on to gains here. It's got about 2 minutes, so.
You make it sound so exciting.
I'm a little bit, my heart is pounding.
We did say meh.
Yeah.
You know, I mean, to absolutely no one's surprise, if you look at volume is below the 10-day average. In SPY, certainly, which is the ETF that tracks the S&P 500, is well below 65.5 million shares versus the full-day prediction, or the 10-day average of 91 million, and the full-day prediction here of 75 million.
Yeah, I think one of the interesting stories on the day is really the weakness that you're seeing in a lot of the cyclical names, particularly in the materials space. Some of this does appear to be tied to the National People's Congress out of China. The idea here that with a higher growth target, and more importantly, one that was focused on building things, that of course would be big for a lot of the materials companies. I guess they didn't quite get that at 5%, but you're seeing a lot of the names like in copper and some of the other materials names moving lower here on the day. That's about 20 seconds ago as we get the closing bells here in New York. Pretty sure everyone there is required to clap, so you're hearing the clapping. The Dow Jones Industrial Average only higher by about 50 points, roughly about 1/10% here as we wait for the numbers to settle. The S&P 500 looks like it's also going to close in the green, but only about 1/10 of a point, only up about 3 points as we wait for these numbers to settle here. The NASDAQ composite looks like it's going to close in the red, down about 1/10% here. That's interesting. The farmer's wife.
I was just watching that. Look at those hats.
Sorry,
going on.
I was a little distracted there for those
They look
on the radio.
incredible.
A bunch of farmers ringing the NASDAQ closing bell there on the farmer's wife platform.
Love to see it.
Russell 2000, Carol Master. I know you're big into farmers. Down about 1.5% on the day.
Is that the Village People?
I don't. Stop.
I love the Village People.
We should point out, in all seriousness, we should point out they are actually part of a television show, ringing the bell on behalf of the Fox network.
Oh, okay. Well, good to know. All right, all right. Anyway, the S&P 500, most names in that average are lower today, 322 to be exact, 179 gaining ground, 2 unchanged. So definitely Scarlett seeing that more of a risk-off trade, despite, though, you know, not a lot of volume.
Yeah, a little bit of flip from the risk-on trade that the day started off as. And just looking at the sector performers, it's kind of all over the map. You've got a bunch of tech names, tech hardware and equipment, along with media entertainment and software services gaining ground, but anywhere from 0.5% to 1.5%. On the downside, what's been consistent, as Romaine mentioned, is those materials names off by 1.6%. And all the members in the auto and components index, all 5 of them, are weaker as well.
All right, good to know. Let's get to some of the specific gainers in today's session. Had a few. We talked about some of them earlier. Apple, certainly a standout, up 1.8%. Top in the NASDAQ 100, really helping earlier the S&P 500 go earlier. It's now up about 20% year to date. You know the story. Goldman Sachs coming out, recommended buying Apple shares for the first time in nearly 6 years after being mostly on the sidelines. This as they really missed quite a run up in Apple because it quadrupled in value during that time. So that is certainly a standout. Enphase Energy, top in the S&P 500 and NASDAQ 100 today. You did have an investment bank based in Hong Kong initiating coverage of the company with a recommendation of outperform, price target of 304, stock closing at 225 and change here in the U.S. trade. It implies a 40% increase from the last price. It's down, though, more than 30% from its recent high in early December. And Snap, I think, Romaine, you talked about this earlier. It was up 14% at its highs, finishing the day with about a 9.5% gain above its 200-day moving average for the first time since 2021. Yeah. We did have Fox News on Sunday, the Senate Intelligence Committee Chairman Mark Warner saying he plans to introduce a bill this week to allow a ban on TikTok specifically, so Snap would win as a result.
How do you ban TikTok? We just can't get it anywhere in the United
Ban
States?
the Chinese technology. So I guess if you ban the technology, I mean...
And that means we're all forced to go to to Snapchat?
I don't know.
The teens have to gather somewhere.
Got to
They're
go
gonna
somewhere.
gather
What else
Snapchat.
old people do?
Got to lose an hour, 2
We go
hours,
back
3
to
hours a
YouTube
day.
and Facebook.
This stuff.
I gotta say, I swear to God, I have carpal tunnel because of all the time I spend on TikTok. My thumbs hurt
Snap
constantly.
is up more than 30%
There's
year to
no
date.
way that I'm going to re-download Snap. But let's get to some decliners
That's
because
you.
there were some interesting ones. Let's talk about Tesla. Shares finished down about 2% or so. Of course, the big news today was that Tesla is going to cut the price on the Model S and the X again. Now the Model S comes in at about $90,000 and the Model X starts at about $100,000. This is the second cut for these models in about 7 weeks. So Tesla really trying to boost demand there. You also had RH actually get cut over at Jefferies, I believe. So that moved from to a hold from a buy. And the reasoning there is that the luxury housing market is struggling to stabilize, and you have corporate headcount reductions, Wall Street bonus cuts. They haven't yet rippled across.
Would you just
the
buy your
luxury.
home already and help out the market?
Oh, I was yes.
Oh.
Yeah,
Wow.
I don't know.
You're an RH person, right?
I wouldn't say I'm a huge RH person. Listen, I'm just trying to buy an apartment. Stay tuned. But in any case, let's also talk about Marvell because you did have another big decline
Are you
in
going to have an
shares.
update tomorrow? I mean, you say stay tuned.
I'm viewing 3 places tonight, so we'll huddle. I'll tell you all about it.
I love how Katie just puts her entire life out.
Romaine, are you getting paid by the interruption?
Just want you all to know everything
Just want to know.
about me. Let's talk about Marvell. It's down 4%. This is a big move, Romaine. It reported weak guidance last week. You had at least 4 banks cut their price targets in the aftermath. Clearly, that weakness is carrying through to this new week as well.
Yeah, and just a real quick update, too. We should point out Spirit Airlines that did close down about 9% on the day, or worst day that they've had going back to May of last year here. Let's take a look at the yield space. Wasn't a lot of price action there. We did see yield slightly elevated here on the day, but pretty much where they've been now in recent days and weeks. 4.8, we'll call it 4.9 on a 2-year, 3.9, almost 4-year on the 10-year. Meanwhile, your 30-year yield still camped out right at 3.9 even.
How can you not want to put your money in the 2-year Treasury?
I don't know.
4.8%.
There you go.
So I was looking this up, so not to get distracted here, and I don't mean to interrupt, but I do get paid by the interruption, Carol Master. The farmers people, it's called Farmer Wants a Wife, and it involves 10 city women, hint, hint, competing for the attentions of a charming farmer.
That is
I
hysterical.
would watch that.
I feel like that's a trope as old as time.
It premieres on March 8th on another
Women,
network.
plural, competing for the affections of one
It
farmer
looks like
guy?
it's just The Bachelor, but with farmers. Don't overthink it, because I'm pretty sure the executives who greenlighted this didn't overthink it either.
If it was on television, I probably wouldn't turn it off, Carol.
All right, well, when we're done watching
have a
Jay
television at
Powell
home,
over
right?
the next 2 days, we
Or
can
when
watch
we get an
Farmer
apartment,
Wants
that should
a
be the
Wife.
first thing you do.
That's true. Okay. I've got.
All right, in the
Anyway,
meantime,
anyway.
let's focus, kids. All right, so we do have some key things to come. We've talked a lot about Jay Powell.
Jay Powell, 2 days.
well,
Jobs report on Friday.
Jobs
consumer
report,
credit numbers.
Yes, indeed. But in the meantime, you bring up JetBlue and Spirit. You do have the Department of Transportation, the Justice Department, right? We could get some news tomorrow, essentially. And it's a reminder that there are fundamental stories that are still going on. We just talked with a fund manager. I mean, he's not he doesn't really care so much about what's going on in the macro. He doesn't think about what Jay Powell's going to necessarily say. He's looking at specific companies. He likes Tesla. He likes NVIDIA. He's thinking about these big macro ideas that are happening, whether it's EVs, whether it's AI, and he's buying into them.
Or people are thinking about, I want to be in value versus I want to be in growth right now. What's interesting, though, just looking at SGX and SVX, the S&P Value Index and the S&P Growth Index, they share a lot of the same names in common. Amazon, Microsoft, J&J, it's more than just 3 companies, but you're getting exposure to the same companies, whether you seek value or growth.
That's the thing. That's why I love indexed math. I don't know, when a few years ago growth meant technology, there's a lot of tech names that now qualify as values. So sort of these, set in stone definitions that we all operate by aren't necessarily
They're all chameleons, right?
Yeah.
Yeah, and we talk a lot with the folks over at Bloomberg Intelligence, Chris Kane here, about kind of how these factors have really gotten very muddled here. And it's just how do you sort of separate the wheat from the chaff? And it's just gotten a lot harder, I think, given the current environment.
I think what's going to be interesting, I think, Scarlett, you talked about it earlier on TV, does the S&P hold its 200-day moving average? I was looking at RSI, Relative Strength Index. It's kind of in the sweet spot, between being right between overbought or oversold, and I think it's kind of interesting that we see the S&P trade there. And does Jay Powell ultimately say something, guys, that kind of changes that, or some economic data points?
And where's the risk? Is the risk that somehow, we think that Jerome Powell is dovish and, we rally out the wazoo, or does he sound hawkish somehow? And, that is a huge bearish signal. I know that we're expecting him to say everything that we've already heard before, to stick to the script, but that seems like the perfect setup for some sort of upset.
Romaine, you going to watch Farmer Wants Wife?
Yeah, I mean, I've been going down this rabbit hole. Apparently, this is a reboot. It actually aired back in 2008 on the CW. Brooke won the last episode here, but they're rebooting it. I know what I'm doing on March 8th, actually.
Who doesn't?
I'm taking off. Yeah, it's a
Just
big day.
Say. All right, guys, that's a wrap for our Monday coverage or simulcast.
Are we done?
That's it.
We haven't talked markets yet.
We are so done.
We did. We covered it.
We did. Beyond the Bell, guys. Catch us radio, TV, YouTube, and Bloomberg Originals. Same time, same place tomorrow. Beyond the Bell at 4 p.m. Wall Street time. All right, everybody, you are listening and watching Bloomberg Business Week. Carol Massar along with Katie Greifeld live here at Bloomberg headquarters in New York City. And we had a guest earlier who talked about how he liked Tesla. It's that whole pivot, if you will, or focus on mobility and EVs and autonomous driving. So we wanted to talk a little bit about Tesla today. He did mention as well some of the price cuts, once again, that we're seeing coming from Tesla specifically. So let's get some perspective. She's been following this company and Elon Musk for a long time. Great insight. Back with us is Bloomberg News senior technology reporter Dana Hull, joining us via Zoom from our San Francisco bureau. Dana, good to have you here with us. I feel like there's a couple of things to get to. So let's talk about Tesla and price cuts. Another round. What do we need to know? What's kind of key about this?
Yeah, so the price cuts have happened. I mean, Tesla changed its website late Sunday night, and the Model S is now roughly $5,000 cheaper, and the Model X is roughly $10,000 cheaper. And the S and the X are a small share of Tesla's overall sales. I mean, most people are buying the 3 and the Y, but this just goes to show that Musk is continuing to basically cut prices. Some people would say this is a clear sign that the company has a demand problem. They're changing prices yet again. They're still, now we're in March. We're almost to the end of the quarter. But Musk at Investor Day last week made it very clear that he sees price as like the big obstacle to people's ability to buy a Tesla. He says that demand is not a problem, price is the limiting factor, and the company is very focused on driving down costs. So it's really glass half full, glass half empty, depending on, kind of where you sit on the trade.
So let's get specific on some of the things he said, because the quotes are great. So he did say that we found that even small changes in price have a big effect on demand, very big. He also said that the desire to own Teslas was indistinguishable from infinite, and that demand will go crazy as the company makes its cars more affordable. And to your point, I mean, you can take either side. It's sort of a glass half full thing. But I mean, what are analysts saying? What is the thinking on the street? Is this a demand problem?
I mean, I haven't seen any analyst notes out today specifically on this price change. I think you saw the shares trade a little lower today. I mean, Tesla tweaks its prices all the time. And, I just think it's interesting that we already had sort of like a really big cuts across the lineup in January where, in some cases models were cut up to 20%. Now they're tweaking again in the first week of March. It's like, what's the quarter looking like? I mean, that's my big question. I'm very curious to see whether sales this quarter are flat or potentially down from where they were last quarter.
I gotta say, Dana, in my neighborhood, what's really wild is I'm seeing more and more Teslas on the streets, and people just parked on the streets. I'm like, well, wait, where are you charging this puppy? But it's interesting. I am seeing them. Like, if I go to the West Coast, I expect to see them. I've always seen them. But I'm really seeing a lot more in and around, certainly the New York Metro.
Yeah, well, now you qualify for the federal tax credit, right? I mean, so a big reason why people are now buying Teslas or people are now taking delivery of their Teslas is they qualify for the $7,500 federal tax credit under the IRA through March that we know of. And the charging moat that Tesla has is a pretty formidable one. And, a lot of people that were maybe toes in the water, not sure about an EV, like we're kind of at that inflection point where your neighbor has one, you get a test drive, then you want one. I mean, it's all happening. The sort of move to EVs is very clear.
Yeah, I mean, to that point, I see a lot more of them on the highway. I
Right.
drive to New Jersey every single weekend, and I
They're
see a lot
there.
of Teslas on the way. I'm still stuck on these price cuts. So the Model S, now that starts at $90,000. The Model X starts at about $100,000. This was the second round of cuts in 7 weeks. Should we be expecting more rounds of cost cuts to come?
I mean, I think Musk has said over and over again that the limiting factor to demand is the cost of the car. So if they can drive down costs, they will, because they want more people to buy them. I think what the question is, are we going to see more cuts before the end of this particular quarter? If they start offering incentives in the final week, that's probably an indication that they're not going to make their numbers. But yeah, no, I mean, I think they're going to continue to drive down costs. I mean, they made that very clear at Investor Day that that's the priority. So how much can they drive down the costs? And, they have more wiggle room to play with price than competitors because they sell direct to consumers and they kind of own the whole ecosystem. Whereas, all the other automakers have dealer networks, or, I mean, Rivian aside, most of the other automakers have a whole dealer network. So Tesla can sort of tweak pricing by as little as $500, and they often do so. We just tend to kind of write about the bigger swings.
Dana, I feel like Elon Musk once again is like upending the auto industry, right, in terms of pricing. Like, all right, let's do another price cut. It's like, you're going to the supermarket and you're buying something, they change it from week to week, if you will. But he does, right? He continually kind of keeps the whole industry on their toes.
Yeah, and I mean, the competitors at the higher end of the market are now like, ooh, like I don't know if like Lucid can cut their prices by $10,000 at this moment, right? So yeah, no, Tesla's get continually tweak with pricing. They have very strong visibility into how pricing impacts demand. They have all the data. They're going to tweak all the time. I mean, what I try to do is, I don't write about $500 or $1,000, but when it's $5,000, $10,000, if we're swinging in the 5% range, I think that's pretty noteworthy. And remember, prices went up during the chip crisis and during the pandemic, and
Right.
now you're starting to see things come back down.
Can I just say, still not very affordable.
It's still a big price tag. I mean, $90,000.
Especially for financing a car. I mean, but you're talking to someone who's never bought a new car in her life and drives a 99 Subaru Beater that is fully paid for.
I love that. Hey, listen, can we get to another story that's actually out from you, and it's on the Bloomberg terminal and at Bloomberg.com. And you remind us that while we didn't get a ton of stuff out of that Tesla investor meeting last week, what we did get is a look at the Tesla bench. Can you talk us through? It's a great kind of read of who, what, where, and why, along with pictures, so that we can kind of get familiar with some of these faces.
Yeah, at Investor Day last week, Musk shared the stage towards the end of the 4-hour presentation with 16 other executives. And it's the first time that so many other leaders at this company have been on stage with Musk. And I think it was a clear attempt by the company to kind of showcase, okay, even though our CEO bought Twitter and has been very distracted this year, we have this deep bench of talent that's working really hard on all of these things behind the scenes. And some faces were familiar, like Zach Kirkhorn, the CFO, Drew Baglino, who's the de facto CTO. But we saw also like the very recently hired new general counsel. We heard from the charging woman. We saw some people that we've only heard as disembodied voices on the earnings call, and I think that was that gave investors some confidence that there is a deep bench of talent there, even if Musk is now running 5 companies.
Dana, you mentioned some names there, but who should we know for the casual, Tesla follower? Who should we keep an eye on?
Tom Zhu, who spoke at the Investor Day, he, is a rising star. He kind of began as like the supercharging guy in China. Then he ran APAC. He's now basically overseeing manufacturing facilities across the company, and he spoke quite a lot at the Investor Day and is definitely one to keep an eye on. I thought Rebecca Tanucci's presentation about charging was spectacular. She's someone that we've never heard from before. I thought she was really interesting. Obviously, Lars Moravi and Franz from Vehicle Engineering and Design are key people as well.
All right, love it. It's really a great house guide to the faces over at Tesla. Dana, thank you so much. Dana Hall, she's senior technology reporter at Bloomberg News, joining us once again via Zoom from our San Francisco bureau. And if we take a look, quick check on Tesla shares, they did close the day down about 2%. They've been on quite a tear, though. They're up almost 60% so far this year. We talked about valuation earlier.
Yeah, I know. I mean, you compare this to other car makers. I mean, mean, it is just incredibly expensive. But as we were talking about, I don't know, you had an interesting move from Morgan Stanley saying, I don't know, you got to think of Tesla, you got to think of Ferrari as, you know, sort of luxury items.
Like right. And you think about kind of the growth rates that they're seeing in terms of revenues. I don't think you're seeing that. 25%, I think we're looking at 2023 for top line for Tesla this year, if I look at the FA page on Bloomberg. All right, Carol Master, Katie Greifeld, this is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We check the markets all day long here at Bloomberg. I'm Charlie Pellet as we await the latest numbers out of Trip.com. The group has been on a tear lately. Trip.com shares so far this year, they are up by 12.7%. But again, we are awaiting the latest numbers out of Trip.com. WW International, the old Weight Watchers, reported loss per share for the fourth quarter that missed the average analyst estimate. Company is making an acquisition. Weight Watchers will will acquire Sequence. That's the digital health platform for clinical weight management. After hours, WW up by just about 1%. Stock market failed to gain much traction today. In fact, the S&P did give up an advance of 32 points. It was up 0.8%, ended higher, barely up by less than 0.1%. The S&P today up by 2 points. The Dow up 40, higher by 0.1%. NASDAQ down 13, a drop there of 0.1%. 10-year yield 3.96% with a 2-year 4.87%. Spot gold down $9 the ounce to $18.46, drop there of 0.5%. West Texas Intermediate crude up 1.1%, 80.56 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. There is more pandemic relief available to claim for small and medium-sized businesses. The ERC is a refundable payroll tax credit your business may qualify for even if it already received PPP. Let the tax professionals at Innovation Refunds show you how to get the money your business may be eligible to receive with no upfront costs. For more information, head to getrefunds.com. So, Katie, lots of things going on in Washington, D.C. tomorrow. We've already talked about Jay Powell being up on Capitol Hill, but there's more.
Oh, there is so much more because the crypto world, once again, will be focused on Washington, D.C. We're going to have oral arguments begin in Grayscale Investments' lawsuit against the Securities and Exchange Commission. This comes back to June. You had Grayscale sue the SEC over ETF conversion for their Grayscale Bitcoin Trust. We're going to talk about that now with Vildana Heinrich. She's a cross-asset reporter, and she joins us now in the Bloomberg Interactive Broker Studio. Vildana, for the casual follower of what the heck is going on with Grayscale, maybe you could just step back and explain what this lawsuit is about.
Yeah, this lawsuit is big news because we have the Grayscale Bitcoin Trust, which is the largest Bitcoin trust, the largest product of its kind for cryptocurrencies. And what Grayscale is looking to do is they're looking to convert into an ETF, which obviously would make the product much more accessible to the everyday person. It would make it accessible to institutions as well. It would potentially help unlock a ton of value because right now you have a lot of Bitcoin stuck in the trust, which is trading at a discount to its underlying holdings. And so that's what all of this is centered around. Grayscale says it would like to convert the trust into an ETF. And so we have the oral arguments kicking off this week, and we'll see what happens. But a lot of people are paying attention because there's a lot of people who would like to see this happen.
Are they right in terms of the conversion would be more true for them in terms of how it trades?
Well, right now it is trading at a discount to its holdings. Should it convert into an ETF, that means that we can have a creation redemption process, which is what is normal in the ETF space for ETFs that can sort of hold the value of the ETF to NAV in industry parlance. But it might be an uphill battle because we do have regulators right now really cracking down on the cryptocurrency space. We know that that's been happening for the last couple of weeks, especially in the wake of what happened with FTX and all of the other fallouts that we had following FTX, but also other ones pre-FTX.
It makes me wonder about their timing. Like, why not wait until kind of the regulatory environment? But you guys know this world better than I do. Why don't they?
Well, I mean, I think a lot of the part of the problem is the discount. I mean, a lot of their investors are really unhappy because if you compare the performance of GBTC versus the actual price of Bitcoin, there's a lot of daylight there.
Yeah, there's a gap between the two. So if Bitcoin is down, it's possible that then GBTC is down even more. So there are a lot of investor complaints. We have heard from a lot of investors who are unhappy with that performance. But again, Grayscale and lots of others in the industry say that they would love to see a spot Bitcoin ETF because right now we have a futures-based Bitcoin ETF. And Grayscale is arguing that because that exists, they should also be allowed to convert GBTC into an ETF.
And just to put some numbers to the differences in the structures right there, GBTC, if you look over the past 5 years, it's lost about 25%, whereas if you look at Bitcoin itself, Bitcoin is up 126%
Big difference.
in that time. Big difference.
Massive.
So you laid out Grayscale's case that because the SEC has allowed a futures-backed product to launch, that they should allow a physically backed product to launch. What has the SEC said about that? What is the street saying about that? What is the current thinking?
So, Carol, you brought up an interesting point in that you were asking about the timing. But what happened was that in October 2021, Grayscale filed to convert GBTC into an ETF. We didn't hear from the SEC until June of last year, at which point they rejected that application, which the SEC has done numerous times in the past. What they do is they cite, any of the issues happening in crypto that we're all familiar with, scams or manipulation, any of those very negative issues that we're very familiar with. The SEC tends to cite those. Within hours, Grayscale sued the SEC. So that's where we get at least a little bit more info on the timing, on why it's happening right now.
What do those folks within the legal world with financial expertise say about Grayscale's case versus the SEC, or the SEC maybe having a better case against Grayscale?
So for one, I did speak with somebody at Bloomberg Intelligence who said there's tons of appetite for this. So we have to remember that there are lots of retail investors. There's also institutional investors who would love.
That doesn't always mean it's the right thing.
Of course, yes, of course. But just to point that out, that there is appetite for it. On the other hand, I spoke with a lawyer who's been involved in the crypto space for a long time, and he said, number one, don't forget what's happening with the regulatory background right now. The SEC, other regulators, they're cracking down. They're really cracking down, especially in the last couple of weeks. It's been sort of just lots of very bold moves on the side of regulators, so don't forget that. Second, it's very hard to go up against the SEC and win, according to this lawyer who has seen maybe not cases like this one, but he has just been following this space for a really long time. He says it's very, very hard to go up against the SEC and actually win. So we have to keep that in mind.
And so what is the sort of timeline here? I mean, we have the oral arguments tomorrow. And again, this case was filed in June, so we've been waiting a long time for this to really kick off. What is sort of the run of show here on this timeline?
I think we're going to be waiting longer. We better get used to the waiting. I think Bloomberg Intelligence says that they're expecting a final verdict maybe in the second or the third quarter. So we'll still be waiting quite a bit.
Yeah, I try to think about with something like this, is it akin to some other innovative investment vehicle in the past that needed legitimacy by the SEC? Can we liken it to anything, or there really isn't anything out there?
I mean, I suppose you could make the comparison to the futures Bitcoin ETF, which got approved a year and a half ago. But that is a different, it's still different because we have crypto futures that trade via the CME. For Bitcoin, for spot Bitcoin trading, you have hundreds of exchanges all around the world. And then don't forget what happened with FTX and what happened with others, where there has been trouble that potentially helps bolster the SEC's case, where they can say, look at all these spots of troubles that have been cropping up, especially over the last year and a half, where, it might strengthen the SEC's case.
Trouble is a nice diplomatic way to phrase what happened with FTX. That bleeds nicely into my next question, because we did get some breaking news a little after 2 p.m. that Alameda, which of course was the hedge fund, the trading arm associated with FTX, has actually filed its own lawsuit, this against Grayscale, alleging, quote, exorbitant management fees. It also accused Grayscale of improperly preventing redemptions from the Bitcoin and Ether trusts it manages. Vildana, to me, this just, again, goes to show how interconnected this entire industry is.
It's super interconnected. We had a ton of hedge funds, especially remember Three Arrows, which is another point of trouble, if we can use that word again, that had been using and trading GBTC. Lots of other places had been using and trading GBTC. But I think, Katie, this is why you and I love the world of ETFs, right? Because we know that, so this complaint, a lot of it seems to stem on the idea that GBTC, it carries a 2% management fee, which tends to be a lot higher than your typical ETF, where you might have, I think the average is something like 0.5%.
I mean, even the futures ETF, which is also still expensive, it has a fee of 0.95%.
That's right.
So it's a big difference again.
So it's a big
Fees.
difference. So a lot of people are harping on this idea that GBTC it charges a larger fee, and they'd like to potentially see it reduced.
It's a tricky one.
But it's interesting because it's the traditional world of finance with ETFs. It's interconnected with what's happening with crypto. Tons of people using GBTC and being interested in it and trading it over the last couple of years. So a lot, I think, hinges on this
Then you
case.
add in the SEC, you add in the courts. It's a lot of fun, Carol.
I can't know. It's absolutely fascinating, but I can't help but feel that once there's better regulatory oversight, you're not so sure.
I don't know. I don't know what will happen in terms of regulation because we've been hearing that word for so long without anybody ever actually telling us what regulation means or defining what they're looking to do. And now you have regulators stepping in.
That's the hard part. Like, what exactly does regulation mean? All right, Vildana, thank you so much. Vildana Hyrek, cross-asset reporter at Bloomberg News here in our studio. All right, let's head off to World and National News. Nancy Lyons in our D.C. newsroom. Hey, Nance.
Thanks, Carol. Norfolk Southern has unveiled a new safety plan following a derailment last month in Ohio that spilled toxic chemicals. It will install more trackside heat detectors and explore the use of newer types of sensors to uncover axle problems. Norfolk Southern had another derailment in Ohio over the weekend. That one, though, did not involve hazardous materials. Several more jurors are speaking out about their deliberations in the double murder trial of Alec Murdaugh. It took them under 3 hours to agree on convicting him of killing his wife and son. Juror Amy Williams spoke with the Today Show about what made them feel Murdaugh was guilty.
Witness testimony was very believable, and the kennel video definitely played a major part. And his testimony.
Williams says the jury did not believe Murdaugh's emotions were genuine during his 2 days of testimony. Murdaugh's attorneys say they do plan to file an appeal. One woman is dead. 2 others are fighting for their lives after what officials in Rochester, New York say was a crowd surge after a concert. The rapper Glorilla performed last night at the city's Main Street Armory, and Rochester Police Chief David Smith says investigators are trying to determine what caused the stampede.
As people began to exit, the crowd began to surge and rush toward the exit. There are some reports that shots were heard, causing the crowd to panic.
Chief Smith says those who incited the panic will be held responsible. Chaos also erupted last night in Georgia at the site of the Atlanta Public Safety Training Center. Activists threw flaming rocks and bottles at officers and set construction equipment on fire. Opponents say the facility, once completed, will be used to, quote, practice urban warfare. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Next Monday, 4:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long here at Bloomberg, and the stock market rally hit a wall today. This update is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to see if your small to medium-sized business qualifies for a payroll tax refund. If your business was impacted by the pandemic, this is your opportunity to take control of your business's future. Learn more at getrefunds.com. S&P today up by 2 points, little changed, up less than 0.1% at the best level of the day. The S&P was up 32 points, up by about 0.8%. The Dow up 40, higher by 0.1%. NASDAQ down 13, a drop there of 0.1%. 10-year yield 3.96% with a 2-year 4.88%. Spot gold down $9 the ounce to $18.46, down 0.5. West Texas Intermediate crude up 1.1%, $80.53 for a barrel of WTI. Well, the stock market did fail to gain much traction today on speculation that a recent rally has probably gotten overdone as economic risks linger. As for the overall mood of the market and the backdrop, Mark Barabow is head of global equity at Jennison Associates, and he was our guest right here on Bloomberg Business Week.
The Fed's going to gradually move rates from here, probably not that much. The economy's been really strong over the last 6 months. Job growth year to date is hundreds of thousands. So it's a pretty good environment fundamentally, although things are slowing at the margin in certain places.
And again, the 10-year yield 3.96%, S&P up 0.1%. Sources tell Bloomberg the Justice Department and Department of Transportation are expected to take action as soon as tomorrow to block JetBlue's $3.8 billion merger with Spirit Airlines. JetBlue today ended higher by 1%, Spirit down 8.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Katie Greifeld live in our Bloomberg Interactive Brokers studio and streaming on YouTube and Bloomberg Originals. All right, so Katie, we've talked about some pretty heady stuff. Just talked crypto, we've talked Fed. We thought we'd just kind of take a step back here and take a look into something like the global toy market because it's massive. It reached nearly $171 billion in 2022, so last year, and by one forecast by iMark Group, forecast to reach $267.9 billion by 2028. So good voice to talk about it. Elizabeth Werner is a QVC guest host, someone who has followed and tracked the global toy industry. She joins us via Zoom from Maryland. Elizabeth, good to have you here with Katie and myself. You did just attend Toy Fest West, which I don't know, I wasn't very familiar with it, but it is a massive toy trade show. Tell us a little bit about what you saw, because I feel like it's coming on the heels of a disappointing forecast from Hasbro that we got last month. So tell us about kind of the mood and what was being talked about.
Yeah, so actually, thank you for having me, first of all. The mood was really great and really festive. It's really been great for us as an industry to get back together in person. So I think that was part of the excitement. There were over 500 manufacturers from around the world displaying toys for this year. And we saw some great things, a lot of great trends, whether it be more diversity and inclusivity for our children to learn more about that when they're young. Of course, loads and loads of products that come from movies and television shows. Teaching our children more about social, emotional learning, a lot of great products for that. Of course, collectibles, gaming. So there were a lot of fun things that we saw there and a lot of excitement.
It's so interesting for me to have this conversation because I just spent the weekend with my niece, who's a year old, and my nephew, who is a year and a half old. So I heard a lot about Bluey. I heard a lot about Coco Melon. When you say, there's this focus around favorite TV, favorite movie characters, name some names here. I need to know what's in vogue.
Yes. So you named two of the very big ones, but you absolutely cannot forget Paw Patrol for that age group as well. Right. Yeah, so Paw Patrol is actually celebrating its 10th anniversary. So listen to this. Paw Patrol is airing in 180 countries, in 30 languages and is in 350 million homes. So we are talking about popularity not just here, but worldwide. And some of the really fun items that are coming out this year, of course, come directly from the show. So the kids watch the episodes, and then part of their development, imagination, is taking those scenes and reenacting them. So one of the items that I brought with me today, the Paw Patrol Aqua Pups Whale Patroller. This
looks
comes
awesome.
directly from the show. Yes, so much fun. It comes with Chase and Chase's actual vehicle as well, which can be put into this actual larger vehicle. We can push a button and out it will launch right through the front. So the kids are going to have hours and hours of endless play with this fun item.
Totally want it. I'm just going to put it out there. Elizabeth, I want to go back, though, to some kind of bread and butter ideas when it comes to, you talked about a lot of enthusiasm out there, and I talked about Hasbro, which came out last month with a gloomy 2023 forecast, and they talked about inflation dragging down demand. They're looking at consumers' pocketbooks, and they're saying, okay, they only have so much to spend. So I am curious about some of these big macro ideas, inflation being one, supply chains, which is something that's certainly pinched toy supply chains during the pandemic. How did they come up, or what's being talked about when you dive into those two areas?
Yeah, absolutely. So with inventory, one of the things that we found was, of course, there were supply chain issues throughout the pandemic. But once those supply chain issues sort of fixed themselves, a lot of inventory came in. And at that point, when all that inventory came in and the pandemic was slowing down a bit, there was a backup of inventory everywhere. And so all of the various retailers were finding that they had to get rid of this extra inventory before they could bring new inventory in. And so that backup was really a major problem in the industry. So we are hoping now, as that inventory, they're going through that inventory, we'll be able to bring new inventory in and see some of these great new items for the upcoming year. And of course, inflation has been talked about a lot as well. The one thing that the toy industry is hoping is that families are going to continue to spend more time at home together because of inflation. It's harder to travel, do things out of the house, and hopefully continue to engage in play and a lot of fun with their families.
Let me just ask you about one other thing, big geopolitical, China-U.S. relations. So much is made overseas in Asia, and I just wonder how that is maybe impacting where supply chains are when it comes to the manufacturing of toys. We know so much has happened over in China and Asia specifically.
Yeah, so it's true. And a lot of the toys are made there, but toys are being made all over Southeast Asia, South America. And I think that we'll have to see as we move forward with the tensions with China, how that is going to affect our inventory. But right now, things are still moving along as planned.
And Elizabeth, you mentioned that one of the focus at Toy Fest West was collectibles. What are kids collecting these days? Because when I was a child, it was Beanie Babies. Those were so hot. Maybe some Tamagotchis as well. What's really popular right now?
That's right. We also had Crazy Bones. I don't know if you remember those, but they look like, little tiny oval friends. And we had Pokemon cards. Well, right now, the collectibles are all miniature in size. Not all, but a large majority of them. Kids are collecting normal things that they would see in everyday life, but in mini form. And one of those I have right here, actually. This is the MGA Mini Verse. Now, MGA has a load of very popular brands, LOL Surprise, Bratz, Little Tykes. Well, they've taken all of those and they've put them into miniature form, little tiny pieces, some of them about the size of a quarter. What's exciting about this line, several of them have lots of fun accessories, but the Make It Mini food is a huge trend. So I don't know if you've seen on social media, but people making little tiny food is something that has been followed. Well, now our kids and yes, adults are actually making little tiny food. Now this food isn't edible, but it will come with all the components. You're gonna make the food, whether it might be donuts or cupcakes or a pie, maybe a shake.
Right.
You're actually going to create that food. And this is something that the kids are collecting. They want all of it, and it's something that we're really looking forward to this year.
$6.97 on LOL Surprise, the official store. I just found it online. Elizabeth, fun stuff. Thank you so much. Be well. Elizabeth Werner, she's QVC guest host, toy industry follower, knows so much about it, joining us via Zoom from Maryland. Carol Masser, along with Katie Greifeld, and this is Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. California Governor Gavin Newsom says his state will stop doing business with Walgreens Boots Alliance after the retailer said it will refrain from selling abortion pills in 20 Republican-led states. The governor directed the California Department of Health and Human Services to review all relationships that Walgreens has with the state, including Medi-Cal and Covered California, the state's two largest public insurance plans. Shares today of Walgreens Boots Alliance fell by 1.8%. Sources tell Bloomberg the Justice Department and Department of Transportation are expected to take action as soon as tomorrow to block the JetBlue Airways $3.8 billion merger with Spirit Airlines. Jennifer Rhee is a senior litigation analyst with Bloomberg Intelligence.
I think they're going to fight it out because they have a really extended end date in their merger agreement. It's July of 2024 with an agreement that they can possibly extend even further than that. That suggests to me that they think they're going to go to trial and they're going to try to fight it out. And they're going to try to make the case that this deal is pro-competitive because it's going to allow JetBlue to better compete with the biggies, the Deltas and the Uniteds and the Southwest of the world.
And today we did see JetBlue up by 1%. Shares of Spirit, though, they dropped by 8.8%. Goldman Sachs Group is recommending buying Apple shares for the first time in nearly 6 years after being mostly on the sidelines as the iPhone maker's stock more than quadrupled in value. Apple up 1.9%. Those are our company stories at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. More to come. First up, though, let's get a check on world and national news. Off to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. Moderna is eyeing possible human testing of shots to fight monkeypox and bird flu this year as the COVID-19 vaccine maker expands into more public health immunizations. The company's president says they're exploring messenger RNA vaccines for a number of pathogens, but he says they need to hear first from regulators and public health officials on how best to advance the vaccine since the need may not be imminent. Well, the White House is reportedly jumping into the fight for women's reproductive rights at the state level. We get more on that from Bloomberg's Nathan Hager.
Offering legal and messaging advice to allies in states that are pushing abortion restrictions. According to Reuters, the White House Gender Policy Council is leading this effort, along with Vice President Harris's office and an intergovernmental affairs team. President Biden's team's hoping to expand on the success Democrats saw during the midterm elections and make abortion rights more of an issue in the upcoming 2024 campaigns. In Washington, I'm Nathan Hager, Bloomberg Radio.
Nearly 36 people have been detained in Atlanta after flaming bottles and rocks were thrown at officers during a protest at a new police training center. Georgia Attorney General Chris Carr says most of the protesters were not even local.
From Massachusetts and New York and France and Canada, an international group of people that are organized to undermine a public safety training center.
Carr says they're quickly addressing the violent attack. Many of those who've been involved in previous protests at the site have been charged with domestic terrorism. The state-of-the-art facility would replace substandard offerings, but protesters say construction involves cutting down so many trees it would be environmentally damaging. Police say more protests are expected this week. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Katie.
All right, Nance, thank you so much. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Thousands of small businesses benefited from a payroll tax refund and beat the odds of shutting down their organizations. This refund is not alone and could help your business weather rising inflation and supply chain issues. Learn more at getrefunds.com. All right, March, as you know, is Women's History Month. Every day this month, we're celebrating significant moments in women's history. Now with your installment for this Monday, March 6th, here's Bloomberg's Lisa Mateo.
On this day in women's history in 1997, Queen Elizabeth II launched the first official British monarchy website. The page was followed up by a number of relaunches and updates over the years. The Queen also launched her own royal YouTube channel, using the popular video sharing website to send out her 50th annual televised Christmas message, which she first delivered in 1957.
25 years ago,
My grandfather broadcast the first of these Christmas messages.
As for Twitter, no, she didn't launch that one. Buckingham Palace got its own account in 2009. The Queen posted her first tweet in 2014 about the opening of the Information Age exhibit at London's Science Museum. The royal family has gone on to join Facebook, Instagram, and Flickr. That's Today in Women's History. I'm Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you so much. Carol Massar along with Katie Greifeld here in our Bloomberg Interactive Brokers studio. So as we kind of look ahead to the week, Jay Powell, jobs.
Jay Powell
What's our
and
focus?
jobs. And then the week after that is pretty consequential, too. When you think about then we have CPI.
That's right.
Then we have Jerome Powell. We're heading into a really fun couple of weeks, Carol.
Yeah, I wonder if it'll change market sentiment. I mean, I feel like the Treasury trade is doing a lot of the work for Jay Powell at this point. They certainly have changed their tune in the last couple of weeks.
Oh, my gosh. When you think about the difference between January and February, it
So
was
different.
stunning. Just a stunning repricing. I don't know what's going to happen in March.
It's hard to guess. Thank you. I know you've got to go off and do some other work. We appreciate you being here.
You're here for another hour.
I am, but you're going to be back tomorrow.
Tomorrow, yeah, I'm looking forward to it.
All right, we are too. Katie, thank you so much.
Thank you.
So appreciate it. Of course, Katie Greifeld, Bloomberg News senior markets reporter, joining us here on Bloomberg Business Week. More to come, though. We've got another hour, including we're going to hear from the CEO and chairman of Banker Hughes, getting ready to sit down with our own Alex Steele. They're going to talk about those global energy markets. I'm Carol Massar. This is Bloomberg Radio.